Today, Bitcoin drops to the $60,000 level to start the week. Defunct Bitcoin exchange Mt. Gox says it plans to start distributing assets stolen from clients beginning in July. And Hen Arad of Solidus Labs weighs in on what the SEC's decision to end the investigation into Ethereum and Consensus means for the crypto industry. Crypto prices in the red to kick off the week, with Bitcoin falling below $61,000 as of noon Eastern. Ether dropped more than 5.5% to under $3,300, and Solana fell 4% to $126. Speaking on CNBC's Squawk Box this morning, Pomp Investments founder Anthony Pompliano weighed in on why Bitcoin is trading in the low 60s compared to around $70,000 earlier this month.
Bitcoin's up 40% year to date. It's up 100% over the last year. So in terms of volatility, this is pretty expected. What we've seen in previous bull markets is that there's 4, 5, 6 different drawdowns of 30% or more. We're down about 15% or so. So this is right within kind of the band that you would expect. I think that what occurs is when an asset goes up a lot, people start to take profit. And so what we've seen is this explosive rally to start the year. People naturally take some of that profit. We're also seeing a lot of people doing the basis trade, where they're basically going long the spot market and they're shorting futures. And so what that is doing is it's dampening some of the volatility, which allows for leakage and some selling. And then lastly, I think, is we get to the summertime, right? You see this, a lot of people in the public markets will say, invest till May and then go away. And so you start to see some of that as well here, where people are seeing these really explosive moves at the beginning of the year. And then also Q4 tends to be a big kind of quarter for crypto as well. And so Q2 into Q3 tends to go kind of sideways. I think that's just what we're
Okay, let's talk about the top stories for today. The Winklevoss twins' combined $2 million donation to the Trump campaign was partially returned after their Bitcoin contributions exceeded the max allowed under federal law. A source within the Trump campaign told us that the portion the twins donated above the limit was refunded to them. That limit is $844,600. The development was first reported by Bloomberg. Now, we reached out to the Trump campaign, and senior advisor Brian Hughes said the campaign is, quote, proud to have renowned tech leaders support Trump, and that he is ready to encourage American leadership in crypto and other emerging technologies. Now, on Friday, we told you that the founders of crypto company Gemini said on X that they each donated $1 million in Bitcoin to support the presumptive Republican nominee. Tyler Winklevoss wrote that Trump was pro-Bitcoin, pro-crypto, and pro-business. The move came as the crypto industry has been increasingly trying to influence the upcoming elections with millions in donations to crypto-focused super PACs. Next, after years of postponed deadlines, Mt. Gox said that next month it plans to start distributing assets stolen from clients in a hack. The defunct Bitcoin exchange made the announcement in this statement today, adding that the repayments will be made in Bitcoin and Bitcoin Cash. The statement said that the repayments will be made from the beginning of July 2024, noting that time has been allotted to ensure safe and reliable repayments to creditors, including technical remedies for safe payments, compliance with financial regulations in each country, and discussion of repayment arrangements with the crypto exchanges. Mt. Gox, which was once the world's largest Bitcoin trading exchange, went bankrupt back in 2014 after a massive hack, which led to hundreds of thousands of stolen Bitcoin. Creditors of the Japan-based exchange are still waiting to get repaid billions of dollars worth of Bitcoin. The repayment deadline is now October 31st of 2024. Last, Bitcoin miner Riot is looking to shake up the board of directors at Bitfarms after the rival rejected Riot's takeover bid. Riot announced in a press release on Monday that it was convening a special meeting as Bitfarms' largest shareholder in hopes to remove the company's chairman and interim CEO, along with the current director of the company. Riot wants to fill those positions and a currently empty board seat in order to fix what it claims are poor corporate governance. This attempt from Riot to overhaul Bitfarms' board comes after the company rejected a $950 million buyout from Riot back in May. Bitfarms also adopted a poison pill at the beginning of this month, allowing it to issue more shares to prevent any one entity from holding too large a stake in the company. Now, in the press release today, Riot said that it had attempted to engage constructively with Bitfarms for more than a year, but that good faith negotiations simply will not be possible until there is real change in the Bitfarms boardroom. We reached out to Bitfarms about this latest development, but haven't heard back yet. However, in a statement earlier this month, Bitfarms said a special committee determined Riot's proposal undervalues the company and its growth prospects, adding that Riot continued to take action in an attempt to thwart the interest of other third parties. All right, let's focus on the Ethereum network for our main story today. After Consensus announced that the SEC was dropping its investigation into the firm and the Ethereum network, Crypto World's Jordan Smith spoke with Chen Arad of Solidus Labs. They discussed what that decision from the agency means for the adoption of the Ethereum network.
So we heard from Consensus this week that the SEC is apparently dropping its investigation into that firm, but also Ethereum broadly, and that seems like a big deal for the network. Can you just talk about what this means now that we've heard this?
It was big news a couple of days ago when Consensus shared on a blog post that they received a letter from the SEC and letting them know that an investigation against their use of Ethereum has been dropped. Important to say that there isn't that much official information out there beyond the blog post, but in terms of what the investigation was, why was it dropped? But considering the SEC is a securities regulator, it's pretty clear that the investigation had to do with whether Ethereum is a security or not, and therefore whether dealing with it without being a properly regulated security dealer, would be an offense. The fact that it was dropped is, largely perceived by the industry as great news. Again, while the SEC did emphasize, based on various reports in its letters, that it does not exclude the possibility of investigations or actions in the future, this was perceived as a signal that it's less likely that Ethereum would be deemed a security, which resulted in a lot of optimism, prices going up, and the industry feeling confident that Ethereum can continue growing as a technology without the risk of these sort of investigations. It's important to say I wouldn't call that perfect regulatory clarity, far from it, but the way I see it, and I think the way a lot of in the industry see it, it's another drip of some clarity.
So yeah, that brings up a good point. I mean, a lot of people are hopeful that we will see more clarity, but this doesn't really answer the question about what this means for Ethereum. And when we were doing our reporting on this decision from the SEC, we reached out to them and they said to us that, we don't comment on investigations, existent or non-existent. So we didn't really get any clarity for them. But for you and for Solidus in particular, I'm curious how you guys are taking this news and what it means for your business, because you announced that you're partnering with Figment, which is a blockchain infrastructure and staking provider. So I'm sure this hits close to home for your business as well. How are you guys taking this news?
Staking Guard, which is a compliant institutional staking solution that we, as you mentioned, announced this week, and that we partnered with Figment on, is ultimately a response to the fact that institutions globally are interested in becoming more involved in staking more Ethereum. There's various data out there. Figment released some data earlier this year that the amount of institutionally staked funds that is with them has grew 5x between Q1 2023 and Q1 2024. Staking is an exciting product for a lot of reasons. It's a great way to make your Ethereum work for you and generate rewards while also contributing to the growth and security of Ethereum, the foundation of Web3. But there are still hurdles in terms of getting this growth exponential and really making institutions feel more confident in participating in it. And they have to do with risk and compliance. And that's really what Staking Guard is about. And you're seeing the industry, and we're very proud to be a part of it, introducing more and more solutions and technologies that allow to enable the potential of decentralization and these sort of products while mitigating the risks. Essentially, if you're an institution, you're usually a heavily regulated entity. And when it comes to offering new services, it's very hard, they can't really take the approach of asking for forgiveness rather than permission.
Do you feel as though it'll be a slow trickle to get institutions involved? You talked about how big the uptake was for Figment. But in the grand scheme of things, do you think that this will still be a slow march, even with this decision from the SEC?
I actually believe that for various reasons, we're going to start seeing this accelerating. And, one of them, of course, is the demand. Institutions want to do it. We're seeing strong signs of that across the board. Another one is the fact that regulatory clarity is coming. Regulators around the world, just like they did with centralized crypto trading, tokens, etc., over the past 5 years, are now turning their attention to staking. It means that obviously the industry needs to provide solutions and explain how we can do this in a safe, regulated, and secure way. But it also means that clarity would allow confidence. There's been a lot of interesting regulatory developments. If ETFs, for example, were approved, which is a step in the direction of Ethereum, more regulatory clarity, and Ethereum being more recognized as a clear asset class. We've seen the Department of Justice in the U.S. announcing its first enforcement action around pre-chain activity. Pre-chain meaning the part of the blockchain process before the blocks are added to the chain. European regulators recently raised some questions around whether MEV, maximum extractable value processes that are also an important part of block building, might be market manipulation. There's a lot. Those questions should be perceived as an opportunity to engage with regulators, show how we address these risks, and ultimately lead to regulatory clarity. That clarity, ultimately allows the kind of growth that you're asking about. That is, ultimately that becomes gradually exponential and grows fast. So again, I don't think all of this is going to happen tomorrow, but it's going to happen faster and faster, again, because of the demand, because of increased clarity, and because the industry is working to show how this can be done securely and safely. And we're very proud to have a part in that effort.
Final question while I have you. Obviously, you have your finger on the pulse when it comes to network security around all things hacks and malicious activity. Just give me an overview of what the state of malicious activity in crypto is like this year. Hacks fell in 2023, but are they coming back as you see them?
I think a good rule of thumb is that when there's more volume and there's more activity, when there's growth, when prices are higher, you'll see more scams. Buzz, FOMO, and just a larger usership, are attractive to manipulators, to scammers, and they try to take advantage of, the activity in order to essentially steal from users. We have seen, in various sides of the industry, growth in scams and hacks this year. And again, it usually comes together with just increased price and attention. One element of concern that we are very focused on is smart contract scams, specifically rug pull scams. I can tell you that on some of the most popular blockchains, we've been seeing a constant increase. On average, on any given day, from what we see, around 25% of new tokens on some of the largest Ethereum-based chains are scams. But I'll also emphasize that, again, this is an opportunity for the industry to provide solutions. Those are smart contract scams are automatically detectable with the right tools. And regulators are also taking notice of it and enforcing more. So scams, unfortunately, are in the grand scheme of schemes, always on the rise, but also the ability to prevent them. And, when financial activity is on the blockchain, there's a lot of opportunity to use the transparency and immutability for automated detection and ultimately cleaner markets.
Okay, that's all we have for Crypto World. We'll be back again tomorrow, and we'll see you then.